Now, we are also watching the housing market today as mortgage refinances hit an 11-year high. Now, this comes after the coronavirus fears have sent rates tumbling. The number of refinance applications spiking 79% in the first week of March, its highest level seen since April 2009. We have Jay Farner, CEO of Quicken Loans, joining us. And we also have Julia LaRoche of Yahoo Finance back with us. And Jay, let me just start with you just in terms of what we are seeing, what your business is seeing, this spike in demand. How big of a spike have you seen over the last couple of weeks?
Well, it's been unbelievable. We've seen doubling in most cases of mortgage applications. In fact, if we look at the first few days of March, we're pacing to do somewhere near $50 billion in mortgage applications this week.
Jay, it's Julia. You just mentioned $50 billion in terms of mortgage applications this week. You've been in this industry a long time. What kind of read are you getting? What does that tell you about what's going on in the broader housing market, even the broader economy?
Well, clearly we know that there's a once-in-a-lifetime, hopefully, situation occurring in the economy that we're reeling from, both on the equity side and now on the Treasury side, that's caused this dip in interest rates. You know, before this happened a week and a half ago, we were projecting a great year for housing. We were investing in advertising for purchase, and we saw a very strong January and February. Requests for full approvals for mortgage applications for purchase were up, and so you know, it's hard to say right now at this moment in time what's going to happen with housing, but we're hopeful that as things calm down over the course of the next 30 or 60 days, we'll get back on track from the purchase perspective. Now, on the refinance perspective, I mean, 80+% of Americans could benefit from refinancing their mortgage. I've never seen that in the 25 years I've been doing this. So we're hopeful that that'll actually help the economy a bit, although we're taking steps back in other places.
Jay, it sounds like these are unprecedented numbers for your company. Are you equipped to handle with this spike in demand? Are you going to need to hire employees in order to help deal with the influx of people either wanting to refinance or purchase a home?
It's a great question. We just had some folks attend the Mortgage Bankers Association winter meeting here this week, and we're hearing across the board that most lenders have been slowing or stopping mortgage applications. There's a few ways to do that. In some cases, they just say they can't take anymore. In other cases, they'll raise interest rates, so it doesn't make sense for consumers. We've been continuing to accept mortgage applications, nearly 7,000 yesterday. I think we benefit from the fact that we've got a centralized business model, and we've invested heavily in technology the last decade. And so through Rocket Mortgage, most of our processing of the mortgage and the communication with the client can be done online on the mortgage app, on a mobile application. And so we're able to scale very, very quickly so we can continue to move forward and grow the business. You know, I think that you're seeing the lack of supply on the mortgage side probably cause rates to actually increase a little bit. I know that they didn't go down as quickly as the 10-year Treasury, and now people are asking why they're ticking up, and it's simply a supply issue at this point in time.
Yeah, it's interesting that you bring up the digital side of the business. That was something I was going to ask you about. So I just want to turn to a little bit a different part of this. We're talking about the U.S. here. If you look out, are you seeing different areas of activity within certain localities, different geographies, states that are picking up more than others? I'd just be curious to get your read on that.
You know, we're a 50-state lender, and I'd say when we look at the geographic disbursement of mortgage applications, it kind of follows along just where the population here is in the country. I'm also curious to watch as we see more of these concerning community outbreaks, if we'll see a step back in mortgage applications in those areas. Up to this point in time, we haven't seen that. It's pretty much tracked the U.S. population. But as days and weeks progress, I'm sure we'll see changes based on people's behavior. I suppose the one benefit that we have is that people can make mortgage application with us over the phone or online, so they can do that from home. And for us to prepare for this, we've actually positioned all of our team members to be able to work from home as well. And we've been running those tests. In fact, we've got thousands of people working from home today to ensure that regardless of whether they're in the office or at the safety of their home, they can continue to help our clients.
Jay, I know just around a month ago there was talk that it was now a seller's market. From your perspective, the movement that we've seen in rates, is it fair to say that it's now more of a buyer's market, or do you still think it's a seller's market at this point?
I would still say it's a seller's market. What's driving that, of course, is inventory. And I know that we've got at least plans as we entered into the spring of home builders trying to increase supply. But with rates so low, I imagine people will recognize the fact that all of a sudden they can afford a home that they thought they could not afford just a month earlier. And any supply that was added into the chain because people were pulling back because of the coronavirus will probably be filled up rapidly by homeowners who all of a sudden recognize they can afford a home of their dreams that now is in their reaches.
All right, Jay Farner, CEO of Quicken Loans, thanks for joining me.
Yeah, thanks for having me.